Right, let's get into your markets. Asian markets traded mixed today, with Japan's market closing in the red slightly. The Nikkei share average declined by 0.064%. The Hang Seng Index advanced by 1.53%, while the Shanghai Composite Index rose by 0.43%. US markets were subdued, although they ended in positive territory. Driving sentiment continued to be uncertainty around trade between the two largest economies, as both the US and China accused each other of not sticking to the terms of their trade truce. Disappointing economic data also put a dampener on confidence, with the latest ISM manufacturing PMI data showing a sharper than expected contraction, a third consecutive monthly decline. The Dow Jones Industrial Average ended 0.08% in the black. The S&P 500 gained 0.41%, while the Nasdaq Composite Index advanced by 0.67%. Looking at local indicators, we see that the all-share index is currently down 0.2%. The rand is trading at 17.89 against the US dollar, 20.40 vis-a-vis the euro, and 24.17 against the British pound. On the commodity front, we see that gold is trading at $3,357 an ounce, platinum at $1,055 an ounce, while Brent crude oil is trading at $64.65 a barrel. All right, let's get into conversation now with Martin Smith. He's a portfolio manager at Anchor Capital. Thanks very much, Martin, for joining us. So the May PMI data out of the US and China seems to be showing that the heavy tariffs period really affected manufacturing activity negatively. And then now, of course, there are concerns that trade tensions could worsen between the two countries after their brief truce. And US futures are indicating that US markets will open in negative territory. But of course, I posed that question to you about a couple of hours ago when I was doing my research. Maybe things have changed.
No, you're still 100% right. S&P looks like it's going to open about 0.35% down, so about 1/3% down. And I think you're right. I think you've got this kind of overhang insofar as tensions between China and the US, how that's going to play out, if the truces around tariffs will continue. I mean, there's been so much back and forth. And I don't know if you've heard the expression, the taco trade, that Trump always chickens out. Although I don't want to be the boy who cries wolf. So that's kind of been the rhetoric around this kind of back and forth with tariffs and what's being implemented and what's not. And I think what it all kind of comes down to is just increased uncertainty, and even uncertainty of the effects of just the back and forth on these tariffs. Like you mentioned, you've seen that PMI data today looking a little worse than maybe kind of the market was looking for. But then I think a lot of the stuff will also only play out in the second half of this year. So I think it plays into uncertainty, and I think with valuations on global markets, specifically in the US, still quite elevated, I think you'll see potentially a period of consolidation on that market because people are unsure and valuations are high.
Yeah. So tomorrow, the higher US tariffs on steel and aluminium at 50% as opposed to 25% right now are set to kick in. We know that last-minute negotiations are taking place with the EU at the forefront of those, trying to bring those down. But if they do go through, what are the implications for the global economy?
Yeah, so again, to the point I was making earlier, it's very much a back and forth, changing from kind of minute to minute, hour to hour with these tariffs and negotiations. I think we'll see that continue with this. But if you look at kind of what the prices of those commodities are doing, or the futures pricing and what those commodities are doing, it's pricing in that 50% increase for right now. So that can reverse quite quickly depending on negotiations. But if that happens, I mean, steel and aluminium are big input costs into a lot of places in the global economy. Automotive is the biggest one. Cans and food and drinks are the two other big ones. But it'll have quite a big knock-on effect from an inflation perspective, from a growth perspective, because ultimately a big input cost goes up kind of overnight. So let's see. And I think let's see.
Yeah, of course, it's a very negative day today. We're hearing the report of yet more tepid growth in the South African economy. The first quarter registered growth, if we can call it that, of 0.1%. To what extent has this affected the rand, if at all? And, you know, what's your outlook for the economy?
So, I mean, it's the thing that I think everyone's maybe a bit concerned about. I mean, if we were sitting here a year ago, and I probably said it a year ago, is that we were looking for kind of plus 2% growth, kind of going into kind of 2025. As things have kind of unfolded, it's just been less and less likely that we're going to get that. I mean, you saw the SAB take growth expectations down for this year down to 1.4% GDP growth from 1.7. The IMF has us at plus 1% only. So I think it's getting more and more difficult, it seems, from a growth perspective in South Africa at the moment, which is a bit unfortunate. That magical 2% mark is kind of what we need to see real kind of GDP growth and real kind of job creation and all of those good things. And I think we're a bit away from that. If you look at this number that came out now, 4 of the 10 industries were positive, but the big one was on the agricultural side of things. If you take out agricultural out of those numbers from today, we actually would have seen our economy contract, go down by 0.3%. So it's tricky. It's tricky, and I think it's the thing that's people are the most concerned about at the moment from a government perspective, I think.
Yeah. Martin, thank you very much for your time and insights as always. That was Martin Smith. He's a portfolio manager at Anchor Capital.